Were you one of the few people who made a ton of money from the recent rally in the GameStop stock? If so, you need to know about the tax impact that's coming for you in a year from now. Hi, my name is Chris Passmore and I'm your social media CPA. So GameStop has been a huge story in the past few weeks, and it's well deserved. The stock went from $15 to several $100s and is now dipped back down to $50. And during that time, several people made a ton of money. It was even reported by USA Today that there was a 19-year-old kid who profited over $100,000. So if you're one of those lucky few people who was able to capitalize on that rally and sell your stock in early beginning of 2021, you need to know what the tax implications of that sale is, because if you made $100,000 of profit, there's going to be a tax bill and you need to be prepared for that. So whenever you sell a stock, you fall into a category that is capital gains tax. And there are two types of capital gains tax. They're fairly simple. There is short-term capital gains and there's long-term capital gains tax. And the tax that applies to you if you sold your stock in GameStop is how long did you hold that stock. If you held that GameStop stock for less than 1 year, meaning you bought the stock and then you sold it in less than 12 months, then the tax rate that you will have to pay on your gains, the profit that you made, is equal to your ordinary income tax rate. That's the rate and the bracket you would be in with your normal tax returns. For most middle income families, that would be somewhere between 22 and 24%. But for those of you who had GameStop for longer than 12 months, you're the lucky ones. You get beneficial treatment in long-term capital gains, and generally that is between 10 and 15%. So you can note there's a notable difference between your short-term capital gains and your long-term capital gains. It could be that almost 10% difference in taxes. So based on how long you've held that GameStop stock will dictate the taxes that you will have to pay on your profit. So let's talk about profit. What is that? It's a fairly simple concept. It's the difference between the price in which you sold the stock and the price in which you bought the stock. So that is the excess gain to you. That profit is the amount that will be multiplied by your capital gains tax rate. Again, that short-term rate or that long-term rate. So now the crux of this entire video is, when is that amount due? And if you sold your stock in January, you're actually lucky in some sense, because that's not due to the IRS until mid-2022, in April, when you file your tax return. So you could have the ability to use that capital for the next year to 16 months. But you have to keep in mind that will be due. So if you made a profit of $100,000, you could have a tax due from $15,000 to $20,000. You need to set that money aside, or at least be aware that when you file your tax return for 2021 in 2022, you will have that payment due of $15,000 to $20,000. The last thing I want to note here is, if you did not sell your GameStop stock and you still are retaining that, there is no taxes due. This is only based on the actual sale of the stock, a realized gain for you. There is no tax for unrealized gains for those of you who are still holding on to your stock. So that's an important differentiator. So if you've not decided to sell that stock, then there is no tax burden for you related to GameStop. Well, I hope you've found that information useful. Congratulations again if you're one of the few who was able to time the market and take advantage of that rally in January. It was kind of nuts. You did well. But just keep in mind, again, what's going to come due in a year from now. Plan for that. And if you have any questions regarding what your tax burden may be, feel free to send me a message. I'd be happy to help in any way possible. Thank you, and I look forward to speaking with you again.